Export numbers out of China for the month of November, stellar. Your reaction?
Well, this is all a result of really three coincidences. One is, of course, the phase one trade deal that got done at the end of last year. Secondly, we're having a resynchronization of global manufacturing. And thirdly, we have a weak dollar. And a weak dollar normally transmits a nice pulse to emerging markets, and particularly for both exporters and also commodity producers. So a 1% drop in the dollar normally leads to global trade rising by about 0.75%. So the weakness in the dollar that we've seen over the last week or so harbingers for actually pretty good global trade numbers and for the exporters into first quarter of next year.
Right, fair enough. But are these numbers sustainable, especially on the export side? I know there's been a bit of a miss on the import side, coming in at 4.5%, whereas the market is expecting a 6% growth. But even so, the direction seems to be strong and strongly positive.
Well, I think there is actually reasonably good expectations for this to continue. First of all, companies are still in a restocking phase as COVID-19 passes through their economy. Certainly, there'll be some replenishment post the Christmas season. So that's, again, bodes well for first quarter numbers next year. And last but not least, we are seeing some economies turn around quite dramatically. And some of these GDP numbers, even in Europe, are suggesting that we perhaps are underestimating the rebound going into 2021. So anything north of 5.5% GDP growth next year is starting to look more and more likely, given some of the sustainability of the releases so far.